Welcome back to the channel Investors, where we break down key insights into major players on the stock market. Today, we are diving into Frasers Centrepoint Trust, a significant real estate investment trust listed on the Singapore Exchange. If you haven't already subscribed to our channel, please subscribe to our channel. Your support truly makes a difference, enabling us to produce more stock and fundamental analysis content. But first, a quick disclaimer. Please note that the content presented in this video is for informational purposes only and does not constitute investment advice. We strongly recommend that you seek proper guidance from a qualified financial advisor before making any investment decisions. So what exactly is FCT? Well, their main game is owning and managing a portfolio of really well-located suburban retail malls across Singapore. These properties are strategically placed to serve residential areas, making sure there's always a steady stream of shoppers and demand for essential retail and food and beverage services. The trust was actually set up in 2006 and is managed by Frasers Centrepoint Asset Management, which is a wholly owned subsidiary of Frasers Property Limited. That means strong management expertise is definitely in the mix. FCT's portfolio includes some familiar names like Causeway Point, North Point City North Wing, Waterway Point, where FCT holds a 50% stake, Tampines 1, Century Square, White Sands, and Hougang Mall. This collection makes FCT the largest suburban retail mall owner in Singapore by net lettable area, with assets under management valued at around 7.1 billion Singapore dollars. They manage over 1,700 leases across about 2.7 million square feet of net lettable area. That's a lot of retail space. A big win for FCT was its inclusion in the Straits Times Index on March 18, 2024. This isn't just symbolic. Being part of Singapore's benchmark index usually boosts visibility and can lead to increased demand from passive investment funds and exchange-traded funds that track the STI. That can potentially provide price support and improve liquidity for FCT's units. What's really impressive is that FCT's malls have consistently outperformed their peers. Tenant sales have been reported to be 15 to 20% above pre-COVID levels. This shows incredible resilience, especially since FCT's malls haven't really been affected by the return to office trend that's hit other retail segments. Their smart focus on casual, affordable dining options has created strong demand and high occupancy. Their business model is really seen as defensive and stable, serving necessity-driven consumer demand. Now let's take a closer look at FCT's financial performance. First up, FY 2024 performance. For the financial year ending September 30th, 2024, FCT did report a slight dip. Gross revenue was 351.7 million Singapore dollars, down 4.9% year-on-year, 253.4 million Singapore dollars, down 4.6% year-on-year. And distribution pay unit, or DPU, was 12.042 cents, a marginal 0.9% decline. These declines were mainly due to the strategic sale of Changi City Point and lower contributions from Tampines 1 during its asset enhancement works. However, if you take those factors out, the FY 2024 gross revenue and NPI would have actually increased by 3.5% and 3.4% year-on-year, respectively. That definitely points to underlying operational strength. But here's where it gets interesting. 1H FY 2025 rebound. The first half of FY 2025 from October 2024 to March 2025 showed a really strong rebound. Gross revenue jumped 7.1% year-on-year to $184.4 million, and NPI increased a solid 7.3% year-on-year, 133.7 million Singapore dollars. Distributable income also saw a healthy 5% increase, leading to a DPU of 6.054 cents, up 0.5% year This improved performance was driven by higher NPI and full 6-month contributions from the increased stake in Waterway Point and better performance from both Waterway Point and Next. This clearly shows that the negative impact of the divestment was temporary and new acquisitions and completed asset enhancement initiatives are really driving renewed growth. Let's talk about their balance sheet and capital management. FCT maintains a robust and very prudently managed balance sheet. As of March 31st, 2025, their aggregate leverage was a healthy 38.6%, which is well below the regulatory limit of 50%. Their average cost of debt has actually been declining, reaching 3.9% in the first half of FY 2025, down from 4.3% in the first quarter of FY 2023-24. Their interest coverage ratio remained solid at 3.28 times as of March 31st, 2025, which shows a strong ability to cover their interest obligations. Plus, their debt maturity profile is well staggered, which really minimizes refinancing risk. Finally, operational strength. Operationally, FCT is performing really well. Committed occupancy rates were an impressive 99.5% for the first half of FY 2025, with all individual retail properties maintaining 98.7% or higher, excluding Hougang Mall, which is currently undergoing asset enhancement. FCT also achieved a positive rental reversion of plus 9.0% for new and renewed leases in the first half of FY 2025, which is an improvement from plus 7.7% in FY 2024. Shopper traffic for the first half of FY 2025 increased by 1% year-on-year, and tenant sales grew by 3.3% year-on-year. The low occupancy cost, less than 16% for FY 2024, suggests that tenants find rents affordable compared to their sales, leaving room for even more rental upside. This combination of high occupancy and positive rental reversions really highlights FCT's significant pricing power and the strong demand for their suburban retail spaces. FCT has been really proactive with its strategic initiatives to boost portfolio quality and drive long-term growth. First, accretive acquisitions. FCT has been making some significant acquisitions, including increasing its stake in Waterway Point and picking up an additional 24.5% interest in Next Mall, bringing its total ownership to 50%. The most impactful recent acquisition is the 100% interest in North Point City South Wing, valued at 1.17 billion Singapore dollars, which was completed in May 2025. This really solidifies FCT's position as a leading prime suburban retail space owner and is expected to bring significant economies of scale through integrated management. Next, asset enhancement initiatives. FCT is actively enhancing its existing assets. The AEI at Tampines 1 was successfully completed in August 2024, achieving 100% occupancy and contributing to higher rents. Another key AEI is currently underway at Hougang Mall, expected to be completed by Q3 2026. And already has a strong 64% of its spaces pre-committed. They also employ a disciplined capital recycling strategy, divesting non-core assets like Changi City Point at favorable prices and reinvesting those proceeds into higher-yielding, higher-quality malls. This approach constantly improves the overall quality and earning potential of their asset base. Finally, capital raising. To fund its growth, FCT has successfully undertaken equity fundraisings, including a private placement and a preferential offering, which together raised about 421.3 million Singapore dollars. The fact that their equity fundraisings were oversubscribed really signals robust investor confidence. FCT has also issued 200 million Singapore dollars in perpetual securities and 80 million Singapore dollars in green notes. Understanding the broader market view and future drivers is crucial. Let's start with analyst consensus. Professional market sentiment is overwhelmingly positive, with a prevailing analyst consensus of strong buy or buy from many reputable firms. This widespread backing suggests high confidence in FCT's fundamentals and future performance. Looking at technical indicators, as of late June 2025, FCT shares were trading at 2.270 Singapore dollars and were trading above both their 50-day and 200-day moving averages, which is generally considered a bullish technical signal. What about retail investor sentiment? While professional sentiment is largely positive, retail investor sentiment is a bit mixed, reflecting a blend of long-term optimism and some short-term frustrations. Many express strong long-term confidence, praising the high occupancy and rental reversion. However, some do voice frustration over recent share price performance and specific worries. Speaking of worries, let's look at some identified risks. FCT acknowledges macroeconomic risks like global inflationary pressures, demographic shifts such as an aging population and increased housing supply, and significant government policy shifts. A specific concern raised by some retail investors is the potential for the Johor Bahru Singapore Rapid Transit System link to divert retail spending to Johor Bahru. However, FCT's management actually views the RTS link as a net positive. They anticipate it will attract more people from Johor to Singapore for job opportunities, directly benefiting FCT's strategically located malls like Causeway Point and North Point City, which are perfectly positioned to serve as connection hubs. This increased human traffic is expected to easily offset any potential retail leakage. Now for the exciting part, key opportunities, especially in Singapore's North region. There are significant opportunities highlighted, particularly concentrated there, driven by extensive government-backed plans. These include over 42,600 new homes planned on Woodlands, Sembawang, Yishun, and Chencharu by 2040. Enhanced connectivity from the RTS link, which will increase human traffic for job opportunities. Strategic economic developments aimed at creating up to 100,000 jobs by 2035 in Woodland, Central, and new economic zones. And evolving retail market trends like increased time spent in malls, growth in experiential retail, a focus on sustainability and wellness, technology integration, and the expanding silver economy. FCT's management is really confident that the upside opportunities from these extensive developments and the projected population increase in the North region will significantly outweigh any downside risk from potential retail sales loss to Johor Bahru, ensuring the continued resilience of Causeway Point and North Point City. This long-term government-engineered transformation provides a structural and substantial increase in shopper footfall and tenant sales for FCT's strategically located malls for decades to come. In conclusion, Frasers Centrepoint Trust presents a really compelling case characterized by its resilient suburban retail portfolio, disciplined capital management, and clear strategic growth initiatives. Its core strength lies in its ability to generate stable and growing income streams from its well-located malls, benefiting from high occupancy rates and positive rental reversions. The strong rebound in the first half of 2025 really highlights the successful execution of its portfolio reconstitution and asset enhancement strategies. FCT's proactive approach to capital management gives them the financial flexibility to pursue even more accretive acquisitions and value-enhancing initiatives. And the strategic focus on Singapore's North region, backed by extensive government-supported residential and economic developments, offers a powerful and sustained long-term growth catalyst. Overall, FCT is a very well-managed and strategically positioned entity within the Singapore REIT sector. We hope this deep dive into Frasers Centrepoint Trust has been informative. If you found this video helpful, please give us a like and subscribe for more in-depth analyses. Leave your thoughts in the comments below. Thanks for watching, and we'll see you in the next one.